inspirational and motivational here at Love How. Get a better mindset and set your goals here at Love How. Educational things you need to know here at Love How. Like credit, home, buying, loans, and much more here at Love How. The space for
we not on Facebook. Hey, everybody. Welcome to the Homebuyers Clubhouse. We go live every Wednesday and every Friday. On Wednesdays, we drop something inspirational and motivational. And on Fridays, we drop something educational. Erica, back, honey, how are you doing?
I am doing wonderful today.
Good. For those of you guys who don't know me, my name is Jessie Lynn. I am a triangle realtor with A2Z Realty. Erica Bass, introduce yourself, honey.
Oh, sorry. I am Erica Batts. I'm your home loan chick. I am your mortgage home lender.
Awesome. All right, you guys. So today we are going to embark on an exciting journey. Erica, all month we've been talking about, all last month we were talking about so many different things about home ownership, all the different things that you could do to create, like buy a home with $200,000, etc. So today we're going to start all the way over to the basics, like how to buy a home for the first time here in North Carolina. We never ever do state specific, so we're going to talk about all the awesome programs that are out there. We're going to talk about down payment assistance. We're just going to break it all the way down and all the things to do and how to prepare for home buying here in the Tar Heel State. So before we go, audience, if you guys have any questions, drop your questions in the box below. Don't be afraid, and I'm super excited to discuss this. And there goes my phone on TikTok. All right. So, Erica, honey, for those of the people out there who don't know what you do as a lender, because a lot of people don't know, as a real estate agent, our job is to help people find a home, and your job is to do what?
My job is to help them pay for the home.
Absolutely. Someone just walked into my office. I think it's Simon, so I'm going to continue. All right, you guys. All right, so step number one to home ownership. Let's kind of go into that. A lot of people don't understand this. The first thing that you really need to do, Erica, is look into your finances. You really need to prepare your finances before starting the home buying journey. And let's talk about that. Why is that so important?
Because you have to know where you're starting from, so you know where you got to try to get to. There are some people, maybe they don't have their savings goal achieved. There are some people, it may be credit. So you need to know where you are so we can try to figure out how to help you. Because there are certain criteria that you have to have in order to purchase a home. Like a certain credit score, there's a certain amount of money that you're going to need to have.
Okay. And let's talk about that as well. So, all right. So the first step is to get pre-approved, Erica. So what is pre-approval? What's a loan pre-approval? A lot of people don't know and understand what that is. So if I go online today and I keep some stuff in, let's talk about it. What is a pre-approval?
A pre-approval is when, as a lender, I've already looked at the information that you provided, like your bank statements, your W-2s, your paycheck stubs, all of those things. And then I'm determined that we as a company are willing to lend you money based on the information that you have provided.
So a lot of people don't understand the difference between pre-approval and pre-qualification. Myself as a real estate agent, if you come to me today and you ask for you say, Jessie, hey, look, I want to go look at a house. People don't understand why a lot of us don't normally show houses without a pre-approval. What a pre-approval looks like to us, it's going to determine your buying power. Because we don't want you to start the home buying process without knowing your buying power. We don't want you to start the home buying process, get your mindset on a property, like the property, love the property, and you can't buy the property. You see what I mean? And
That is
a
correct.
pre-approval letter is almost like cash. to a seller.
Mhm.
It's almost like cash, but it's not exactly cash. But that pre-approval is going to tell the seller, "Hey, Mr. Seller, I have done everything that I need to do. I can buy this house today. I have someone who's going to give me the money to buy a house." And a lot of the times, if you don't have that pre-approval letter, the seller isn't going to accept your offer without that pre-approval letter because you are wasting their time. You could be wasting their time. They don't want to go under contract and you can't buy that house. Does that make sense?
It does, and even if you're buying a house cash, most realtors are still gonna wanna see proof of funds. So they have to more
Absolutely.
than just say that, "I have the money to buy this." You have to prove that you have the money to buy this.
Absolutely. Absolutely. So a pre-qualification is you just go online and you say, "Mr. Lender, I am pre-approved for this amount," but a pre-approval is basically stating that the lender has verified everything that you've said already. Is that right, Erica?
Well, a pre-qualification is basically information that you have put in and
Mm-hmm.
nobody has verified that information. So I can put in that I make $100,000, but
Mm-hmm.
when you get my paycheck stubs, I only make 50, well, then that's a problem.
Okay, awesome. All right, so now we know the difference between a pre-approval letter and a pre-qualification letter and why it's important. So once you get pre-approved for a property, what you're going to do is we're going to sit down with your real estate agent, and which would be me or anybody, a real estate agent, and we're going to start searching for homes. This pre-approval is going to tell you where to start. Now, Erica, if I start searching for homes, I had a client yesterday, right? We started the process. We started looking at homes, but the issue was the home was over her budget slightly, but that's okay. The property has been on the market for a while, so we could negotiate that. But one of the issues that came up was HOA. Erica, why is that important to kind of pay attention to how much the HOA is versus the sales price, or why to take the HOA amount into consideration as well as the purchase price? If you have a good real estate agent, they're going to be able to tell you this. Go, Erica.
Mhm. So your HOAs are important because that's part of your housing cost. Just like we've heard the horror stories of the
Mhm.
HOA put a lien on the house because you didn't pay the HOA fees, all of those things. So we have to make sure to, even though we don't include that in the payment that you pay to us, we do
Mhm.
include that in your housing expense so that we can make sure that that housing expense is affordable for you.
Yes. And another thing is you want to make sure, like I said, if your agent don't know this, it's going to be important for you guys to know this because you don't want to go under contract. You're going to pay some money here in North Carolina. It's called due diligence, a due diligence fee, and an earnest money fee. That due diligence amount is not refundable. Once you give them that money and you go under contract, and then you send your information over to your lender, and then your lender is going to tell you, uh, you don't qualify. And that's why it's so important to have an agent or have a lender or someone that's there that's gonna you're gonna be able to reach out to because you don't want to put your deposit on the market and some places it's like 1% of the purchase price and then you lose that money. So that's why it's so important to make sure that you guys are not on the edge of your pre-approval amount. If you are pre-approved for 350, you don't want to go out and look for a house for 350. Do you normally give them a little extra space for the HOA, Erica?
It depends. So I usually, if they tell me that they're looking in, we have a conversation about what kind of properties you're looking for. So I
Mm-hmm.
usually put a placeholder amount in there for HOAs.
Mm-hmm.
Just in the unless it's a community that I already know, like if they're looking in towns where HOA isn't really a thing, then I
Mm-hmm.
won't put it in there. But most of the time, if you're going to be looking in a metropolitan city, I'm going to put a placeholder in there for you because I don't want you to get to that point where they're like, oh, well, the HOAs are $200 and you don't have space to still get that loan with that additional $200.
But the crazy part is, I noticed with that HOA was like close to $500 a month. I said that, whew,
Well, it
that's
depends on whether you're looking
crazy.
for a
That's
single
crazy.
family or like a condo. A lot of condos, it is quite up there. I saw one last week where it was $1,500 a month for the HOAs.
Girl, this was a townhome. It's crazy. All right, so I'm moving ahead. We're moving ahead of ourselves. All right, so step one is prepare your finances. Step two is you're going to make sure you get pre-approved. Step three, you're going to start searching for the right home. You're going to make an offer, do your negotiation. Step four is you're going to do inspections and appraisal, and then we're going to close the deal. So let's talk about it. So financial preparation, what we're going to do is we're going to discuss the aspects of the buying a home. Erica, credit scores. What's the lowest credit score that you can get a home for? What kind of credit score are you looking for if someone comes to you to purchase a home?
Generally, I'm looking for a 580 and above. There are some loan products that you can get as low as 500, but those do require a larger down payment.
Okay. And what was the number again?
580 is the main number that you're looking for. Most of your government loans right now, that is going to be your minimum credit requirement. Keep in mind that a lot of people will go to maybe their big box bank or something like that and hear a credit score that's different. That's
Mhm.
because they have their investors require something different. But the actual guidelines say 580 for most products.
So what about a down payment? How much do they need to save for that?
Down payment is going to be anywhere from 3 to 5% generally, depending on what loan type that they have. If they're looking in that 580, they're generally going to need at least a 3.5% down payment.
And let's kind of talk about budgeting for your monthly mortgage payments. Why is this important?
Well, a lot of people will consider the amount of rent that they pay and say, well, if I'm paying $1,500 in rent, then I should be able to pay a $1,500 mortgage. And it doesn't work the same because the rental companies are just looking to see if you make three times the rent. We're considering all the bills that you have, all your credit report bills, when we look to see what is actually going to be affordable for you.
Okay, okay. So I hear this a lot. We hear this a lot. Again, like you said earlier, I can't be approved for rent, but I can be pre-approved for rent. I can get a rental. I can pay $1,600, $1,800 in rent, but I can't get pre-approved for a mortgage. So what is this thing that we call a debt to income ratio? Like what is that and why is it important? And why can't I be approved for a mortgage, but I can be pre-approved for rent? Can you break it down a little bit more, honey?
Sure. Part of the thing, we all know about the 2008 housing crash, all of that. And part of that
Mm-hmm.
was because debt to income ratio wasn't a thing. So that basically means that we didn't care about what other bills that you had to pay, as long as so you said you could afford this house payment. And so to avoid a housing crash, that's part of some of the things that were put into place. So we want to look at all of your credit report bills and make sure that it doesn't go over a certain amount in order so that you can then make this mortgage payment. So you're not
Okay.
stuck, all of those type of things. And then whereas rent, they're not looking at the additional debts that you have to pay. They don't care that you have an $800 car payment. They don't care about any of those things
Mm-hmm.
because, they're going to get their money either way. They're okay with evicting you and putting somebody else in there.
So, okay, well, let's talk about this then. Since we're talking about debt to income ratio, I know as a North Carolina housing specialist, I have the ability to give any of my buyers that work with me that's currently pre approved a $1,000 grant, right?
Mhm.
I had to take classes to do that, right? And it doesn't take a lot of qualifications as far as that with credit. You just need to have a certain income limit. But
Right.
there are other programs here that's for first time home buyers. We have your down payment assistance program.
Mhm.
We have the North Carolina Home Advantage Mortgage. We have the MCC programs and the other down payment assistance programs. Are you able to go a little bit deeper into that?
So those generally require a larger down payment. I'm sorry, a larger credit score. So you're going to be looking
Mhm.
for at least a 620. There's some that require a 640 as the minimum credit score that you're going to need in order to apply for those. You also have to meet the income requirements. So it's usually 80% of the median income for that particular area. S- A lot of metropolitan areas, that number can be pretty high. So I think in the Wake
Mhm.
County area, you're looking at a family of two can make, I think it's like $108,000.
Mhm. So, all right. So, what I have here is we have the North Carolina Home Advantage Mortgage. It offers down payment assistance for up to 3% of the loan amount.
Hmm.
And this can help your first time home buyers, and it also can help your move up buyers to get into a new home.
That's
We
correct.
also, yeah, and we have the North Carolina First Home Advantage down payment program. They offer up to $15,000 in down payments as well. And then you have the NC Home Advantage Tax Credit, which can save up to $2,000 in federal taxes each year. I know my sister; she's been in her home for a very, very long time, and she uses that, and like her income has increased a lot over the years. And this right here saves her a lot of the times from paying taxes, just this one program alone. So, you guys, depending on what state you are in, you definitely want to do your research. You definitely want to look into it to kind of see what programs work for you, what can you qualify for. But here in North Carolina, these are the programs that we offer. Again, today I know we're doing state specific, but normally we kind of talk about all states. But yeah, these are the programs that we have. If you guys are curious about it, just Google it. Google down payments assistance programs from my state. I know the credit union. They offer programs as well. The small banks and the local banks. Go into your bank and talk to your bank and say, hey, look, what kind of programs do you have? Same thing that we just asked Erica, who is a lender as well. What kind of programs do you have? What are your requirements? What are your credit requirements? Someone on Facebook just mentioned NACA.
Hmm.
NACA, they have a program as well. I mean, I'm telling you, there are a ton of programs out here that can help you guys. So you definitely need to stop listening to your cousin. You need to stop listening to your friend and do your research. Sit down and talk to a lender. Talk to your real estate agent and talk to them about what you qualify for. So, Erica, let's talk about the different programs because we have like fixed rate mortgages, we have adjustable rate mortgages. A lot of people they are afraid of the adjustable rate mortgages because of what happened a few years ago.
Hmm.
The rates were going all the way up, but these programs have changed a lot since the market crashed a few years ago. They have changed, so don't be afraid and stop listening to everyone else and go out and do your research. Hey, who's that? I can't even see. Recently, thank you. Good to see you. Reach out to us. But yeah, I can't see. I got I got dark.
I would say a lot of the things that have changed. So an adjustable rate mortgage basically means that that mortgage is going to start at a certain percentage, and
Uh huh.
if interest rates increase, then that mortgage will generally increase. So one of the things that has changed is you really have to educate the buyer on what
Mhm.
an adjustable rate mortgage is. There's paperwork that they have to sign that says that they
Mhm.
understand what this is. So generally, that's going to be 5 years. It's a good option to get into a house,
Mhm.
but you need to be prepared to refinance within that 5 year time span if you don't want that increase.
But we always tell our clients, we always tell our buyers, look, talk to your lender. Ask them if you're pre-approved for all of the loan types, line by line section, and compare them based on their fees and all of that. Look at them and see what works best for you because some of these programs $0 down. Some of them could have a higher rate. Some of them could have a higher interest rate. So talk to your lender and based on where you're trying to move as well, right? So what's a USDA loan? What is that?
So USDA is made to populate rural areas. When you look at the USDA map, like for North Carolina, there is a lot of USDA area that's not going to
Mhm.
be in the your metropolitan area. So it's not going to be Durham, Raleigh, Chapel Hill, Charlotte. It's not going to be in those cities. But if you're willing to go a little bit outside of those cities, like Clayton is a USDA area, and that's what 20-25 minutes from Raleigh.
Mhm.
If you're looking at in the Charlotte area. Um, I don't know exactly what the USDA areas are there, but it's usually within 30 minutes of a city. And so
Absolutely.
that's a 0% down. And there's no PMI, any of those things. So it's a really great option.
So before we go into other things, let's kind of talk about the score. I know, like I said, we talk about this a lot here, but for the new people that's just tuning in, we're doing TikTok today as well. We had a few people on there in the room. So let's kind of talk about that. FHA loans, like what's the minimum score for that?
580.
580.
Unless you can do a 500 with an
Mm-hmm.
FHA loan, but you have to have at least 10% down in order to do that.
Okay. So let's talk about VA. What's the score for that? That's a trick
VA
question, y'all.
actually has no minimum score.
Uh-huh.
So, but it does just have to get an automated approval on the system. So
Uh-huh.
usually we find that unless your debt to income ratio is really low, we usually find it's hard to get an accept after under 580.
Absolutely. And you have so we have VA and USDA.
Yes. USDA is going to be 580 is your score there. And
Okay.
looks like one of our viewers here said part of Garner is a USDA area right after White Oak going towards Clayton. Right. So right past that Clayton area, usually
Hmm.
there's not a lot in Wake County. But if you can go just past that, there's definitely some USDA area out there.
Absolutely. All right, you guys. So we've gotten you pre-approved. You've spoken with your lender about the different loan types and the different loan options. So next thing we're going to do is we're going to start your home search and we're going to do the home inspection process, right? So of course, we're going to talk about working with real estate agents. Look, you guys, whenever you guys go out here and you start shopping for a property and you're considering new construction properties and all of that, you definitely want to make sure that you are not walking up into these sales centers, speaking to them and not knowing that these people do not represent you.
Take
Um,
your real estate agent with you.
Absolutely. They do not represent you, they represent the seller. And what is it hurting by you not having a real estate agent representing you? You definitely want someone representing you. Erica, why is that so important? We talk about this a lot, but tell the new people.
Well, just like if just like if you go to court, you don't want to represent yourself. So it's the same thing. You want somebody who's going to fight for you. You want somebody who's going to have your best interest at heart. You also want somebody that's going to be able to negotiate things. Like a realtor is going to know that, hey, maybe they're going to be willing to throw in this refrigerator because new construction
Mhm.
doesn't come with a refrigerator. But
Mhm.
hey, I can talk to them and get them to put in a refrigerator or add that refrigerator. So things like that. So real estate agents may be able to give you things that you can't get on your own.
Look, y'all, I have a seller right now that I'm working with. I'm in the process of selling her home, but she is in the process of getting a property built. And I'm like, okay, so when are you supposed to close? Girl, I don't know. She don't know. And this is why it's important because one day they tell her this, the next day they tell her that. She really don't know when she's supposed to close on her home. If you had someone representing you, we know the expectations and the timelines and all of that, and we can constantly put a little bit fire up under your builders, okay? So just know this. Here you have a buyer agent and you have a seller agent, okay? And then you have something in between that's called dual agency. You want somebody there that's going to be fully representing you all the time. It costs you nothing to have a real estate agent. It doesn't cost you anything if you do the right thing once you sign those documents. Okay? So get you a real estate agent, get you someone who's going to represent you. Now, while you're shopping, you definitely want to understand your needs and your preferences. A lot of the times, we always tell buyers, especially if you're not ready right now, but you know that you're thinking about buying sooner or later, you want to start going to these open houses. You want to know what you're looking for. Okay? Go to these open houses. Do you want an open floor plan? What kind of plan are you looking for? Get a feel of the properties, get a feel of the neighborhoods, and once you're ready, you can have your mindset ready. You can have your goal. We always talk about vision boards. Right now, it is September. This is the time to start planning for next year. Right now. Do not wait until January to decide that you want to buy a house in 2024. Start your goal planning right now. Start your resets, start planning, doing whatever you need to do right now. Mindset is everything, okay? Erica, what you doing over there? Um,
Look,
mindset.
I'm looking at the screen here. Look, I keep forgetting I'm looking at two screens because we on live on Facebook and on TikTok.
So yeah, mindset is everything. Thank you so much. I appreciate you guys. Thank you, thank you, thank you. So okay, once you find your house, you like your house, you love your house. Let's talk about these inspections. So, well, actually, let's talk about due diligence and earnest money. So what you're gonna do is you're gonna make an offer on this property, right? You're gonna make an offer, and then you're going to discuss due diligence and earnest money with your agent. Due diligence is not required. Earnest money is not required, but it's going to show the seller that you're serious. I know a lot of the times the buyers they want to go in and not offer anything, but it's going to show the sellers that you're serious. You can come in with the highest offer, but if you don't have due diligence there or earnest money there, the seller's not going to accept your offer. Most likely not going to accept your offer because what you're doing is you're buying them time. You're paying them for their time. If they are taking their property off the market, and you change your mind and you back out at the last minute, that's their compensation, okay? So you don't, and then let's say if your contract falls through, or you just say the day of closing, I don't want this property anymore.
Mhm.
Now, what the sellers are looking crazy, and then they got to start all the way over. So this is why it's important for you to save money up for a due diligence deposit and an earnest money deposit. Now, the difference is due diligence is non-refundable. If you change your mind for any reason whatsoever, if the inspections come back bad, if they're no good, you do not get that money back if you back out. Okay? If
Right.
you go to closing, you get that money back, right? If you change your mind before the end of your due diligence period, which is about 21 days, it's negotiable. You can get that money back, okay? Your earnest money back, but you can't get your due diligence money back. If you go all the way to closing, you would get that money back as a credit at closing, okay? Did I
Mhm.
miss anything, Erica? Did I miss anything, honey?
No, I think you covered all of it.
Okay, so yeah, all of that is negotiable. So the next thing you want to do is you want to. Am I missing in the comments? Because I see a lot going on at the bottom.
No.
Um, a lot of it is negotiable. It's definitely negotiable. Your amount and your dates are negotiable. So once you do that, you're going to go through inspections. Why are inspections important? They're not required, by the way. The lenders do not require an inspection. But Erica, should they get an inspection, honey, girl?
Absolutely, because that tells you what's wrong with the house or what's going on with the house. So that tells you how old the roof is. Because I can, as a seller, I can tell you the roof is 2 years old. But when the inspector gets up there to look at it, if they see shingles missing, all of those things, they can tell you that it's 12 years old. So things like that. So that those can tell you things, potential things that you want to look out for.
Look, you guys, when you guys are looking at this house, it's pretty. It's a lot of stuff that's covered up. The inspector, they're going to go under that house. They're going to go in the roof. They're going to test your outlets. They're going to test things that you can't see. And then they may recommend that you hire a licensed contractor to come out and take a look at it. Okay. So it's very important for you guys to get an inspection. Termites, all kinds of stuff could happen. But it may not be there, but it's just like insurance. It's insurance. You may not need it. You don't plan on using it, but you definitely want to make sure that you're protecting yourself because this is a major investment for yourself, okay? For you and
That's
your family.
and just like
Yes.
Chris pointed out that to get an inspection on new builds as well. And I
Mm-hmm.
totally agree with that. You want to get an
One
inspection on any house that you buy.
1,000%. Always. I've seen a new build come back with 73 items on there.
Mhm.
73 on a new construction property. So you definitely want to make sure that you get those as well. All right. So how much time? Ooh, we are almost out of time. Okay. So you do your inspections. Once you do your inspections, you're going to negotiate repairs. Of course, sellers are not required to make any repairs. Okay. They're not required. The home is as is here in North Carolina. I don't know about anywhere else, but North Carolina is as is. And your standard contract is as is. So you want to negotiate these repairs, but know and understand they are not required to negotiate these repairs. Once you negotiate the repairs, Erica, what are they looking for? So the clock it ticks. You have about 21 to 45 days, depending on your lender. And then while they are doing inspections and you're negotiating, the lenders are doing what, Erica?
We're doing underwriting. We're doing all of those things. The appraisal is being done during that time span as well to let you know what the house is actually worth.
Absolutely, absolutely. So, audience, do y'all have any questions? All right. So once we get done with that, we are going to. You say you order an appraisal. If
Hmm.
the appraisal doesn't come back, if it comes back under, what happens with that, Erica? So if they go in, they want this house badly. They want this house. They gotta have this house,
Hmm.
and they decide to bid about $30,000 over asking price, or if they offer asking price. It's important to get a CMA, have your real estate agent do a CMA. But let's say the numbers come back low. What happens with that?
Then you're going to have to either renegotiate or you're going to have to come up with that additional money in cash.
Y'all hear that? Okay. So make sure that you always make sure your real estate agent is doing a CMA. If they're not doing it, ask for it. You may not even know what a CMA is,
I was
but
going to
you
say, can you
ask
tell them
for
what a CMA is?
it. A CMA is something that a real estate agent do. They're gonna do a comparable. It's called a comparable market analysis. So you're going to compare apples to apples. So you don't want to. You're going to look for recent sold homes in your area. So back in the day, we would go back no more than about 6 months, 12 months, depending on the area. Right now, the market is kind of iffy. So you don't want to go back no further than about 3 months, right? If it's a one level home, you're going to find all the one level homes in that area. And you're also going to try to find homes that's similar in style, age, design, and size, okay? And you're going to try to keep it within that neighborhood. But again, if it's a rural area and you can't find any properties, you don't want to go out no further than 2 miles. Okay. So they're looking for properties that has recently sold that's similar to yours. And that's what the appraisers are going to use, right? Real estate agents can't give you a value on a property. The appraisers can, and that value on that property is only as long as it's good for only like 24 hours, right? So what we're going to do is we're going to give you a range. The appraisers are going to give you an exact value on the property. Okay, so that's the difference. So you choose your price. We're not going to tell you what to offer on that property, and then we kind of go from there. And we kind of hope and we pray that it appraises. All right, Erica, anything else?
That's it. Once you get the appraisal, we've done the underwriting, we've done our part, then we are ready for a clear to close. And that's basically the underwriters has said, okay, it's okay to close this loan, but you still
Yay.
don't want to do anything else. Don't do anything with your credit. Don't make any large deposits, withdrawals. Don't do anything until you actually go to closing and get your keys.
So look, we've heard a lot of horror stories about people going getting all the way to closing day and can't close on their property. And just know, don't lie on your application because the lenders they are underwrite, they're looking and reviewing and verifying this information all the way up until the day of closing. So if you quit your job, if you decide to change bank accounts, if you decide to take out some extra money out your account, they're gonna ask
Hmm.
you. They're asking all of those questions. So don't do anything crazy. Don't quit your job. Don't change jobs. What you say? Go from 1099 to from W-2 to
Right.
1099.
And
Don't
not,
do
no,
any of that.
and I would say not only are we asking, but we are verifying. So we're
Yes,
not just taking your word that you still work there on the day of closing. We're calling the morning of.
yes. Pay your rent. Continue paying your rent on time as well. I know you're excited about buying your home and you need some extra cash, but they are verifying. So please don't change anything. Continue to do everything the same all the way up until you get those keys in your possession, in your hand. That it?
That
It's
is
closing
it.
day. It's
It's
closing
closing
day,
day.
y'all. On closing day, you're gonna do your walkthrough before the day before closing or the day of closing. You want to make sure that the property's still there. There, a lot of people they always say, "No, I don't want to do a walkthrough," but you want to make sure the property, all of your repairs have been done. The property is in the same condition. It hasn't flooded. It's not on fire or any of that. That's your final walkthrough. And
Hmm.
if the seller has not done those things, I know you're excited about closing, but do not go to closing unless you have a check or something in writing or something stating that they're gonna fix these items. Okay? Okay. Capiche, capiche. Do y'all got any questions? Cause the thing was kind of all right. Facebook,
No.
they mentioned some stuff over there. All right, cool. Erica, got anything you want to add
Yes.
before we go, honey?
I don't. I think we covered a lot of it. If you want additional details and additional information, we have a credit and home buying boot camp that's going to start on Tuesday. That's Tuesday at 7 p.m. Eastern Time. It is available online. It is $20.23 because we want to get you prepared in 2023. I have the link in my bio on both Instagram and TikTok. And I'm sure Jessie Lynn has the link in her bio as well. And we
Mhm.
want to see you there. We want to help you fix your credit. We want to help you get prepared, learn how to read your credit report, answer any questions that you may have. We want you to be prepared by the end of 2023 in 6 weeks. We're going to get you together.
Home and Credit Masterclass, y'all. And if you can't make it at 7:30 p.m. at night, it's only 1 hour long. We have a course. You're gonna have your own classroom portal. All of your resources will be in there. Again, we're teaching you how to repair your credit. Before you leave this class, You're gonna have credit disputes already done. We're gonna show you ways to repair your credit by only using like 10 minutes, and I promise you only 10 minutes a month to do it. Okay. We're going to teach you that. We're going to teach you about home ownership, and we're also going to include our book. We have a book that's called the Home and Credit Journal. You're going to get that, and the class costs less than the book. So get the book. Let's go. We're going to work on your mindset, which is very important. Let's do it. 2024, y'all. Y'all got to get y'all a home. 2024. You can do it in 2023. So let's.
I was going to say they're going to be ready by the end of 2023.
Let's get it. All right, y'all. Thank you guys so much for tuning in. Facebook, TikTok, we appreciate you guys. Thank you so much for tuning in. For those of you guys who don't know me, my name is Jessie Lynn. I'm a Triangle Realtor with A to Z Realty. You can reach me at 919-818-9854. Miss Erica Batts, loan officer, honey.
Yes, this is your home loan chick. My name is Erica Batts. You can reach me at 919-608-7916, or you can reach me at ericabatts.com. That link is also in my bio.
And look, y'all can reach us on Facebook, on our page, and in our private group at Homebuyers Clubhouse. You can find us on YouTube at The Homebuyers Clubhouse. And you can also find us on our website at www.thehomebuyerclubhouse.com. We hope you guys have an awesome day. We hope you guys have an awesome weekend. We'll see you guys on Wednesday. Let's talk to you guys later.
Bye.
Bye. Now, I got to figure out how to log out of TikTok in a second. I see y'all in TikTok. Y'all can drop y'all questions in the bottom. Facebook, I'll see y'all later. Have a good day. Deuces. If I can find my